Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Green across the board. Gold up $55.16, sitting at $1,557. Silver up 50 cents, sitting at $13.31. Platinum $644, and palladium $1,766. Are we in a bull market? You can see right now we are definitely going into higher prices. I have an article from Seeking Alpha talking about gold. Prepare for a bull market to begin any day. And is this the day? This article was written today, so today could be the day we might start to finally see things recover as things finally play out. Not saying that COVID-19 is blowing over, but maybe people are starting to take advantage of a weaker dollar and going into precious metals as that safe haven alternative. Anyways, the summary of this article, by the way, this link will be in the link to this article will be in the description. So the summary is: precious metals prices on Friday settled higher on a weaker dollar and on massive amounts of monetary stimulus that global central banks are pumping into the financial system. The 10-year Treasury note yield on Friday fell negative 20 BP, which is bullish for gold. The gold and silver markets plunged after meeting the targets of the annual supply and demand that we published on September 28, 2019. The silver market is bottoming, which with a conglomerate of significant cycles on a weekly basis, which indicates that we could be at a turning point. So, the fundamentals. Here's the fundamentals. Precious metals prices on Friday settled higher on a weaker dollar and on massive amounts of monetary stimulus that global central banks are pumping into the financial system. So, the 10-year Treasury note yield on Friday fell negative 20 BP, which is bullish for gold after New York Times reported late Thursday that the Trump administration has asked for state labor officials to hold off on releasing figures for unemployment filings until the federal government issues national totals. Several states have already released running totals of claims this week, which has prompted Goldman Sachs to estimate the U.S. unemployment benefits are poised to surge to a record 2.25 million by next week. The gold and silver markets plunged after meeting the targets of the annual supply and demand that we published on September 28, 2019. During this time, when gold was about $1,700, we had a conglomeration of data points that indicated that it closed below $1,650 would complete the annual targets for the immediate future. If the market were to close below $1,650, that would activate a short trigger. That short trigger activated the yearly mean of $1,417 as a target. So we can see right here it's showing everything that has to do with gold and if it's bullish or not. We're looking at the exits in the short term. The look to take profits of short is on the corrections of $1,261, 1031 level, and go on to a yearly reversal stop. If long, use the 1031 level as a yearly stop close, and gold will be canceled until the canceled order. Look to take profits on longs as we reach the $1,655 level, 1,803 level during the year. The VCPMI AI strategies for the next week. So the VCPMI is a robot. It's an algorithm that it uses to tell you where the best times to buy, sell, trade, or hold are. And it's cool because the robot doesn't have any emotional attachment, so it can't speculate. It goes off of real figures, real numbers. So anyways, one of the metrics that we use in the variable changing price momentum indicator, the VCPMI, automated algorithm is the 9-month simple moving average. This average came at the $1,454 level. The immediate target was activated after a short trigger initiated on a close below $1,655 was $1,454. That level identifies the shift in the trend momentum of the market. With the market coming down to a low that we saw of $1,450 on March 16th, it completed a 9-month simple moving average target anticipated on September 28th. Then the market reverted. The artificial intelligence of the VCPMI identified these levels back on September 28th, 2019. When the market touched these levels, it activated a new setup or trade alert. When the price closed right above that target, it activated a bullish buy trigger from that level. So you see gold right now. The market closed Friday at $1,501, and right now we're sitting at $1,557 for gold. So it consolidated the past few weeks after the lows were made and reverted right back up to make the high of $1,554. It has been trading in that range since Friday with stabs into the $1,450 area to $55 area, and it made a low of $1,457 and reverted right back up to the $1,451 area. So is more downside likely though? When we look at the relative implied volatility factor, with the market coming down in such short time to meet these targets, it tells us that the VCPMI is expecting a swing rally, which could start any day. That the fact that the market came down and the volatility increased to record levels, at the very least, we are looking at a substantial relief rally that could start very soon. So they're saying that it's looking like precious metals prices are going to be rising soon. And we actually might be seeing that right now. We also use cycles in relation to the VCPMI. This came right into an expected 180-day cyclical forecast that coincided with price bottoming during this period. We've seen a convergence of cycles coming together. We could be looking at a bottom in the gold price, so we might finally have hit that bottom that we've been looking for and hoping for and waiting for. The silver market bottoming is with a conglomerate of significant cycles on the weekly basis, which indicates that we could be at a turning point. A convergence of cycles is indicating that silver price and time have come together harmonically based on short, intermediate, and long-term data in the area of accumulation. We are about to experience a very powerful rally that could reach the 16.71 sell to targets over the near term. So here's the JNUG, and here's some commentary. So we have been trading the Direction Daily Junior Miner Index Bull 3 times. This ETF is called the JNUG profitably since the beginning of the year. You should always have to be aware that something unprecedented might happen, and that's the unknown factors, the unknown variables. In this case, we're dealing with a phenomenon, which is the pandemic. It has upset the equilibrium of the market relation to volatility, leading to trading at historical levels and below the mean. It is like throwing a rock into a pond. You see the rock hit the waves, but you don't see the ripple effects once the rock disappears beneath the surface. We are in the same scenario in the COVID-19 case, where the rock was now living through all the ripple effects. The ripple effects have broken any previous benchmarks related to the relative implied volatility. It has disrupted portfolios and turned upside down strategies in place before the virus struck, especially traders using aggressive XXX ETFs. Such ETFs move 3 times velocity in underlying an instrument, such as JNUG and others. Most people have commented about JNUG are unaware that what's going on with the incredible anomaly between the physical metal market and the paper market, which is futures and derivatives. It is difficult to buy physical gold or silver without paying a hefty premium. Similar situations in the 2008 economic crisis or the credit crisis. So, I definitely think that there is potential. You guys know my perspective or my idea on physical paper markets or ETFs. I definitely think physical silver is the way to go. You also know, if you watch some of my recent videos, my perception on buying right now. Just be extremely careful. I'd rather go to local coin shops where you can get closer premiums instead of having to pay the huge premiums that are online, also waiting a 15+ day shipping delay. So this article goes on to say, I believe that this is a dip, and if you did not buy more than you can handle, there's a great value in gold mining shares and gold at these levels. It is not the end of the world. It's a trade right now. It's underwater. I have lost all profit I've made in the past 6 months, but I'm buying assets without margin calls and managing my risk intelligently in aggressive markets. I'm eliminating the risk of all margin calls. So he's saying he's even lost money, but he's still playing it smart. He's trying to take the emotional attachment out, which that's definitely what I'm trying to persuade onto you guys as well. And it appears that there is very high probability that we come into the next week, so that we'll see a relief rally in the precious metals market that could bring back the price of gold monthly mean of $1,603, which would also mean probably about $20 silver, or $17, $18, $19 silver. So a close above $1,514 would activate a monthly buy trigger, activating the mean of $1,603 as the target. We are in a monthly buy trigger, which activated last week, but the market coming down and testing the $1,462 level. It had 95% probability of the market reverting back to the mean. We have established a bottom into the gold market. Probability is very high that we're going to find buyers, which is also going to pump more money into it. It could also put the place one sell level of $1,655 and the annual target is $1,650, which we published back September 20th, 2019. So there's definitely a lot of potential. Right now, I definitely think that we are in some very, very good waters for precious metals. We see this could be the bottom. And and we might be breaking through the resistance levels, which is also going to be very bullish, especially as we see new buyers as things look up. So right now we are in very, very interesting times, but I think a lot of potential is here. So anyways, make sure to smash the like button. The link to this article from Seeking Alpha will be in the description if you want to check it out yourself. Make sure to smash the like button. Make sure you subscribe because I do post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.